Well, good afternoon, ladies and gentlemen. I should also say good morning to those of you who might be joining us from the Mountain Time Zones, the Central Time Zone, or the Pacific Time Zone. I also want to say good evening to those of you who might be joining us from across the pond out in the UK or parts of Europe, and maybe good early morning to those of you joining us from Asia, perhaps, or Australia as well. Welcome to today's presentation, the Introduction to PowerOptions. Today we're going to discuss tips on navigating the site to help you save time with your options research and analysis. We're going to begin in just a few moments while we're waiting for some more of our attendees to join us in the room. For those of you that are currently on your 14-day free trial, I just want to remind you that if you do subscribe to PowerOptions at the end of your 14-day free trial, you will receive an additional 14 days for free. So you'll have use of the tools for one full month before you're technically billed for the service. In addition to that, those of you that are currently on your trial or those of you that are subscribers, I want to encourage you, of course, to take advantage of those free coaching sessions. Remember, they're completely free. They're unlimited. You can have as many as you want. The coaching session is essentially a 35, 40, 45-minute phone conversation with myself, a one-on-one discussion. I'll walk you through the tools on the site, answer any questions that you have. We can discuss strategy. We can just discuss adjustments, for example, on different positions. I cannot give you direct advice on your positions or what stocks or options to trade, but we can walk through the math, and I can show you the tools that will help you with your tracking and analysis of the current positions that you're holding. So you want to make sure that you take advantage of that as well. Well, it's about 12:01 by my clock, so let's go ahead and jump right in. First, just want to review what is PowerOptions. Well, PowerOptions is a patented suite of search and analysis tools designed for self-directed options investors. Ernie Zerenner created PowerOptions about 14 years ago after he retired from Hewlett-Packard. He was an options trader, of course. He'd been trading options for 20 years. And at the time, what he was really looking for was a tool where he could identify only those positions in a given strategy that matched his stock and his option requirements. He'd spend a lot of time in the library, for example, or going through the newspaper, IBD, for example, or the Wall Street Journal, looking for stocks that sort of matched the criteria he wanted, and then only to find out after he did his analysis and narrowed it down to 2 or 3 stocks that those 2 or 3 stocks did not have options. We have to start from scratch and go backwards. And it's very time-consuming, as many of you might have experienced back in the old days before the advent of the Internet and the services that are available for options trading and analysis. Now, our patented search tool is available in over 23 different strategies. This allows you to scan across the entire universe of options in less than a second to identify only those positions that match your stock and option criteria. Once we've identified those positions, we can quickly compare the risk versus reward or compare it to other combinations in that given strategy, see which ones best match our risk-reward tolerance. We're going to walk through that today as well. And we have that powerful set of portfolio tools to help you paper trade, track, and manage your positions, and that's really important. The management of the position is almost more important than actually picking the right stock and picking the right strike price. It's the management after you open a position that's very important. In addition to that, we also, of course, offer countless educational articles and help pages, and as I mentioned, we've been in business for over 14 years, but everyone here on staff at PowerOptions uses the tools to trade their own personal account. Myself, like many of the others here at PowerOptions, I don't log on to my broker's account until I've done all of my research and analysis and know exactly what position I'm going to enter and the net debit or net credit I'm looking for from PowerOptions. I only log on to my broker to make the trade. Okay, now my name is Mike Chupka. I'm the Director of Education here at PowerOptions. I've had the great pleasure of working with Ernie and the PowerOptions staff for the past 9 years. I handle all the coaching sessions and a lot of the education on the site, as well as host webinars, obviously. I have co-authored 2 books on options investing with Ernie Zerenner, the Naked Puts and the Protective Options Strategy. We'll talk about those later. I always want to mention that I am versed in all strategies on the site and other strategies that are not supported on the site as well. But there are certain strategies I've never traded in my accounts and never will. Things such as naked calls, short straddles, short strangles, and iron butterflies. These positions don't match my personal risk-reward tolerance, so I don't enter them. But later on in the Q&A session, if you have questions about those strategies, I encourage you to ask me, and I'll do my best to answer them based on conversations I've had with customers over the years and my knowledge of options as well. Well, with that being said, let's go ahead and navigate over to the PowerOptions suite of tools. And we'll just do a brief introduction to the main home page, and then we'll get started with our presentation. When you first log on to your account. This is a trial account, of course, so for those of you when you're first on a 14-day free trial or maybe even a 30-day free trial, when you first log on to your account, you'll start off in the main Home tab. PowerOptions suite of tools is designed as a tab navigation system. From the main Home tab, you have the submenus here where you can sign up for one of those free coaching sessions. You can access the Learning Center menu in addition to the tip sheets that are available there, the user guides that you can download, and quick start guides. There's also the link to the webinars, the archived webinars and upcoming webinars, so you can go in the Learning Center and get a lot of information. Some of those books I mentioned and other products are of course available in the Power Store, and we do have a blog that you can follow, and using the My Account sub-tab, of course, you can make any changes to your account, your user ID, password, mailing address, or anything along those lines. In addition to that, for those of you just getting started on your trial, you want to make sure that you take advantage of the 4 steps listed below. That free user guide, you can request to have a printed user guide mailed to you for free. You can also download the PDF from the Learning Center. There are a variety of interactive flash tutorials to help you get acquainted with the tools, the search tools and the portfolio tools, for example. You can access those through the Learning Center as well. As you know, we host a variety of free live webinars during the week for PowerOptions directly. Typically every Wednesday we do sort of this introduction to PowerOptions, and every Friday at 4:30 p.m. Eastern Time in the afternoon right after the market closes, we also host the open forum Q&A session. We don't have any planned material. You can just bring your questions. We spend about an hour answering our attendees' questions and showcasing the tools on PowerOptions as well. And then, of course, the 4th step is that free individual coaching session. So you can register for that any time that matches your convenience, so we can walk through the tools on the site. Oh, Bob mentioned something real quick here. Bob wanted to know, is this being recorded? I may have to leave early. Yes, I am recording this presentation, Bob. I'm going to hope to have it posted later on this afternoon, but it might not be posted until tomorrow morning, depending on the time. And to access the webinar, once it's recorded, Bob, when you log onto your account, just click on Learning Center. And from the Learning Center menu, right in the middle there, click on Webinars, and that'll take you to our Webinars page. And then you'll see our upcoming webinars on the left, and over on the right we have all of our archives, the PowerOptions Tools Archive, Options Strategies Archive, Open Discussions, Radioactive Trading, and PowerOptions Applied. This presentation, Bob, will be in the PowerOptions Tools Archive, so just click that header up the top. And you see we had one from a couple weeks ago, the Introduction to PowerOptions, February 8th, 2012, focusing on covered calls. Today we're going to do more of a broad spectrum, but it will be archived here as well. So you'll have that available there in the Webinars menu. So yes, this is being recorded, Bob. I'm sorry you have to leave early, but you'll be able to access that maybe later on tonight or early tomorrow morning as well. All right, so let's navigate back to our main Home tab. I'm going to click on the Home tab there. One other feature that I wanted to showcase very quickly before we get into the heart of our presentation today is underneath those 4 steps to get better acquainted with the tools, of course, and for those of you who are subscribers, you typically won't see those 4 steps. But down below we have the pod feature here, the market data pod feature. So this allows you to pick and choose what pods you might want to see, so when you log on you get a quick view of the current market. The first pod we have, of course, is the watch list. You can select 3 different watch lists, just enter in your stock, and this shows you the current price and the change today. And then you can do further research and analysis using the More Information button on those stocks that you track. Once you create a watch list, if you put 15 or 20 stocks into watch list number 1, for example, whenever you open a search page in any strategy, you'll have the choice to scan for positions just against those stocks in your watch list, rather than looking across the universe of options. If you just want to narrow it down to the 15 or 20 stocks in your watch list, you'll be able to do that. And we'll, of course, show that when we get into the search functionality. The listing of upcoming live webinars. Over here I also have market activity, which shows some changes in the broad-based indexes, the SPX, for example, NDX, Dow Jones, and the VIX. And I also have a pod here for indexes, I apologize, ETF, gainers and losers, so I can see the standard, the inverse, and the leveraged. And there are other data pods that you can select. Over on the left here you can see the listing of earnings announced today, latest stock splits, stocks that hit the new 52-week high or new 52-week lows, recent site events, for example, top industry gainers and losers, and top stock gainers and losers. So to view a pod on the main page, just select it from the drop-down menu. and it'll place the pod in the next available column, the column 1, slot 2. I now have top stock gainers, but of course you can move the pods anywhere you want to across the different 3 columns here. Now if you just wanted to see the headers, of course, you can minimize the pods just clicking that little blue button there with the minus sign. So that will just give you the header for the different pods. And then if you wanted to expand it later, just click it as it has the plus sign to expand the different pods as well. Lastly, of course, if you wanted to remove a pod, just click the red X there, and that'll remove the pod from your field, and then you can always reselect it from the drop-down menu. If you have a suggestion for a particular data pod that you would like to see that's not available, just send us an email or give us a call. We'll work to see if we can implement that into the screen. Okay, let's go back up to the top here and let's talk about our tab navigation system again. Home tab is always locked in place. You can't remove that. The My Portfolio tab is also locked in place. You can't remove that. From the My Portfolio tab, we can access the profit and loss portfolios. This is where we access our current trades, our open trades. After we've closed positions or rolled legs, the closed positions or expired positions will appear in the historical reports, and the analysis view here in the submenu will show you all of the positions you have open and any closed positions organized by stock symbol. So if you just wanted to see sort of the monetary value of all your positions on a given stock, you can link to the analysis. There's also a snapshot view, an allocation view, and an alert summary. You can set the variety of different alerts for your different positions that you're tracking, and of course setup as well. We'll talk about all the tools in the portfolio at the later half of our presentation after we go through some of the tools for the actual strategy searching, identifying, and comparing positions. Okay, so next we see I have about 7 or 8 strategy tabs selected: covered call, naked put, long call, long put, married put, so forth, bull put and collar, and also a custom spread tool which allows me to build spreads or build positions on the fly. If I just wanted to see what the current at-the-money covered call is, or slightly out-of-the-money bull put credit spread on a given stock, I can build that quickly in the custom spread tool and then do further research and analysis as well. And then we can change and modify all our different strategy tabs based on what we want to see. And to do that, we would just click on the Other Strategy tab over on the far right. Now our Other Strategy tab here allows us to pick and choose which strategies we wish to view on the main header. So over here on the right, I have my 8 selected strategies, 7 strategies in the custom spread tool. And then of course over to our left we have all of our available strategies that we can select. So if you don't see a strategy when you first log on to your account that you're interested in researching or finding positions on, you want to go to the Other Strategies tab and just swap out a position, maybe your strategy I should say, that you're not using, and incorporate one of the ones from the available strategies that you are looking for. Now before we go any further, I just want to launch one poll today. We only have one poll today. And to help us gear the rest of the presentation, what I'd like to know is what types of option strategies are you trading or researching right now? If you're just getting started in options and you're not trading any particular strategy, that's okay. You signed up for PowerOptions, or you're getting to learn options because you heard of a specific strategy, maybe just buying calls or maybe just doing covered calls. So just enter that as the selection here. So our choices are covered calls and naked puts, kind of parity trades of one another. The protective option strategies, married puts and collar positions. Vertical spreads and iron condors, so bull put credit, bear call credit, bull call debit, and so forth. And of course time spreads as well. If you're doing the diagonal spreads, that says vertical spreads, but I apologize for that. If you're doing the diagonal or the horizontal spreads, just let me know. All right, so I've had the poll open for about a minute. I'm going to leave it open for another 10 seconds. If you haven't voted yet, I encourage you to do so. We'll close this poll down about another 5 seconds. 4, 3, 2, and 1. Let's go ahead and close that. Oh, got a couple more votes coming in. Leave it open a little bit longer. All right. Let's go ahead and close that poll now, and I'll share the results with everyone. Okay, so we have 56% of our attendees looking at covered calls and naked puts, 50% doing long calls and long puts, 44% doing the protective option strategies, the collars and the married puts, for example, 19% doing vertical spreads, and I have 25% doing the time spreads. All right, fantastic. Let's go ahead and hide those, and as we see from our field here, I do already have the covered call and naked put selected, as well as long call and long put. I do have married put and collars as well, so we've covered most of those, but I only have bull put credit spread here. So for the time being, let's go ahead and change some of this. What I'm going to do is remove long put. We'll leave long calls up there, but I'm going to remove long put. I'm going to move the married put and the collar spreads up using the arrows over on the right. So I'm going to have covered call, naked put, and then our second place today was long calls, and then protective option strategies. And I don't have any time spreads in there, so let me go ahead and add that in. I'll just add calendar calls for the time being. Select it from the available strategies and click Add to Menu. Once I have my strategies based on my preference, I'll just click the Save button down at the bottom here. We see our tabs have changed slightly. We changed some of the order. We added calendar call. We still have bull put credit spread up there as well. All right. So, if you're just doing vertical spreads, you might want to clear all these out and just select bull put credit, bear call credits, bull call debit, for example, and bear put debit. And if you're just doing, for example, covered calls and time spreads, you don't have to have all 7 strategies here. You could just select covered calls, naked puts, calendar calls, and calendar puts, and just have 4 tabs available on your screen. Okay, now, to access the tools in a given strategy, naturally just click on the tab there. When I hover over a tab, we'll see the submenus for the given strategy. So for covered calls, for example, we see that we have the available tools here for quick find, option chain, search tool. This allows us to search across the universe of options based on our selection, our criteria. In every strategy, we have some sample searches set up for you. These are themed searches to help you get started, to sort of use as a stepping stone to create your own personal search. And of course, you can also search by symbol. Now, very quickly, for all of our strategies we selected, I'm going to briefly review what I would do in each strategy based on if I'm looking for positions on a stock. Let's say that I already researched a stock and I know I want to trade a covered call on it, a bull put credit spread, or a calendar call on it, for example. Or if we want to search the universe of options, and we'll get to that in a moment. Now, for certain strategies, there's different approaches. For covered calls and naked puts, we see that we have a link to the option chain here. If I know that I just want to do covered calls on Apple, for example, rather than use the search by symbol tool, personally for covered calls and naked puts, I'm going to link to the option chain. And the reason why is that the option chain underneath the covered call menu and the naked put menu, the PowerOptions chain will show us the important criteria if I sold these positions as a covered call. Now sure, just like any option chain, you have the strike price of your calls, you have the bid and the ask price as well, the Black-Scholes value for that option, your volume, open interest, for example, as well, the implied volatility. Can't find that on a lot of basic options chains, and your delta as well. But what we also show is the fields that are pertinent to a covered calls trade. So on this 5-strike call chain that I linked from the submenu underneath the covered call, I have columns for downside protection. This is the option premium, the call premium divided by the stock price. So if I bought the stock now, sold the at-the-money weekly 515 call, that's what we're looking at the top here. Our expiration date is 2 days left. Well, we'd have a 1% downside protection. We also have our percent if unchanged. If we sold this over the covered call, we'd have a 1% unchanged as well. And then our percent if assigned, if the stock moves above our strike price, would be 1.4%. And I can also select to view things such as the percentage time value, range in the money, and percent probability above. I like to use this field personally. There's another tool there in that submenu, the quick find, that kind of shows you the monetary value, what's available right now if you're going to sell the position as a covered call one stock at a time. But I prefer to use the option chain because what I typically look at is, well, what is my comparison of downside protection versus percent if assigned? And then, of course, I might also evaluate the probability as well. If you don't trade weeklies, you just want to look at the standard next month, that's perfectly fine. Up at the top, I could just select March. And this shows me the next available month, next expiration, March, 24 days away. We still have the same fields. If I'm looking at Apple and I want to do covered calls on Apple, not a stock I do covered calls on because of the underlying price. What we see here, our 515 at-the-money call has a bid price of $15.60 and an ask of $15.75. we'd have a 3% downside protection and a potential 3.5% if assigned, and we've got about a 48% probability of the stock being above that strike price and getting assigned at expiration. And of course, why I'm here, what I want to look for is, well, what position in March really matches my risk-reward tolerance? I want higher downside protection on this covered call. And, I realize that I'm going to give up a slight return. I want to go deeper in the money. Maybe I'm looking more at the 505 strike, where I have a 4% or 4.1% downside protection and a potential return if assigned of 2.6%. Of course, if I'm more aggressive on this position, or maybe I'm just looking to hold the stock and sell out of the money calls, well, I'm going to go to the out of the money range where I know I'm only going to collect maybe the 525 call, for example. We're going to collect a lower downside protection, a lower upfront premium, but my potential if assigned would be higher, but that, of course, is based on the stock actually trading above that strike price and getting assigned. So for covered calls and naked puts, one stock at a time, looking for positions one stock at a time, I personally prefer to use the option chain. For our long call traders, let's click on long call, and anytime you click on a strategy tab, you're taken to the strategy homepage, you'll see the similar setup. You'll have an overview pod with some brief description of that strategy. You'll have the tools pod. Now, all the tools down below here are the same as what's available in the quick links in the submenu down below. You just have a little bit of description here. And then you'll always have a learning center pod as well for that particular strategy. And for long calls, we have the optimized long option finder tip sheet, as well as Bollinger Bands for long options. Bollinger Bands is one of the filters that you can use. For long calls and long puts, you do have the ability to just go to the option chain to see the different prices, but I prefer to use the long option finder tool if I'm looking at long calls or long puts one stock at a time. Again, we'll stick with Apple. And we saw that Apple was trading at around 513. Now let's say I have a projection that in the next 60 days or so, I believe Apple might be trading at around $530 or $535 per share. What the long option finder does for us, if I have this projection on Apple that I think the stock's going to be trading at a certain price, I can use the option chain and find the different prices for the current options and then say, okay, well, let me go to the Black-Scholes calculator from the More Information button and see what these options would be worth, or this particular option would be worth, if the stock hit my target price and my target date. Well, that takes a lot of time to go through each strike on a given stock. This long option finder does that for you. So let's put in our stock symbol here. Our expected price of the stock, let's say 535. Now this is a higher price stock, so I know I'm going to have to put in a higher investment amount. Let's say we were going to trade about $5,000 into long calls. And my expected target date, let's say we projected 60 days from today, we think the stock's going to be trading around 535. So let's say that would be around April, let's just say April 13th, 2012. Okay, oh, get the date right there, folks. Now I'll just click Submit. 1002, 1003, 1004. Okay, so in that roughly 4-second breakdown, what this tool did is it did exactly what I said that we would do on the chain one at a time, which would be very time consuming. What this tool did is it went out and looked at the entire option chain for Apple, and it said, okay, here are the current prices for these different calls, and if this projection is met, if the stock's trading at 535 on April 13th, here's the Black-Scholes estimated price for that particular option, and what would your highest percentage return be? Now, this is theoretical. It's not etched in stone, but it gives you an idea. If I think that the stock would be trading around 535 on April 13th, the tool shows me that currently the April 475 call has a price of $49.10. And if the stock moved up to that price, well, based on my investment amount of $5,000, we can only buy one contract, of course. But if the stock was trading at 535 on April 13th, this April 470 call would be worth about $60 just at intrinsic value, but that would be a return of roughly 22%. That's the highest theoretical return on the chain for any of the options currently on Apple, if the stock was trading at 535 on April expiration, or April 13th, my apologies. Now, of course, volatility might change. You might have a projection of volatility changing. It shows you the current implied volatility of 0.32. If you expected the volatility might drop, it might drop down to 0.3 or down to 0.28. You can enter that in the field below and click Submit. And then this would identify for you if there's a change based on your projected volatility of which options would now match. And we see we still have the April 475 call still roughly at the same price, and that's because it's near intrinsic value. And this works the same for the puts. Even though I clicked on it from the long option finder, from the long calls, if I change this to a price of 475 on April 13th and clicked on submit, instead of showing me the calls that are available that would give me the highest theoretical return, we now see the puts that would give us the highest theoretical return as well. Okay, so covered calls and naked puts, look at one stock at a time. I recommend using the option chain to compare your returns versus downside protection and probability. Long option finder, I recommend using, for long calls and long puts, I recommend using this long option finder to identify positions one stock at a time. And typically it's because if you're looking for a position, a long call or a long put on a given stock, it's probably because you have a projection of where that stock's going to be. All right, keeping with the same motif very quickly, for the other strategies, married puts and collars even, calendar spreads, bull put credits, any of the vertical spreads, if I'm interested in doing, let's say, bull puts, let's take bull puts, but any of these other four strategies, really any of the other strategies other than long calls, covered calls, and naked puts, if I want to see positions one stock at a time, I'm going to prefer to use the search by symbol tool. So when I click search by symbol, it prompts me simply to enter in our stock symbol, stick with Apple. I'm going to look at March, just 1 month out for bull put credit spreads. And to start with, I'm going to leave this at less results. You can change the filters to less, more, or all, but I'm going to stick with less right now. Let's go ahead and click submit. Now this is a wide range because Apple's such a high price stock. Let's change this to make it easier to view. I'm actually going to change it to Apache. It's around a $100 stock, APA. Now, let me just change that. Just give us a better view instead of so many numerous trades there. All right, there we go. So there's a decent grouping of positions. We have Apache at roughly 110.52. And what we're seeing here is the different combinations that are available. But as we kind of saw in the option chain, when we were looking at the covered call menu, what we have here is the important information as far as what is the percentage return, the total net credit, the maximum risk, which is the difference in strike prices minus the net credit, and of course the probability. Now at any time, when we are in the option chain for covered calls, or when we're in the search by symbol or the search tool, if you wanted to see other data, just simply click that See More or Less Columns button at the top, and then you'll be allowed to pick and choose which data columns you wish to view in this particular field. Well, so what I'm doing here is just as a quick view, I'm comparing what I'd want to see for my risk-reward tolerance. So I'm doing a bull put spread. Sure, it'd be great to have a 44% return, but my probability is only at 52%. In general, I like to maybe look for credit spreads that have a theoretical probability of greater than 75% or so. So I'm probably focusing in this range here, 78%, 93%. But I also want to make sure it just quickly matches my net credit. So some of these with the 93% gain here, the 93% probability, we only have in a couple of cases. Here's one with a 4.6% return with an 11-cent net credit. I don't know if really that's going to match my risk reward. And then of course here we also have the fields that have the 78% probability but are more along maybe the leverage return I'm looking for a credit spread. But you see here, this is what it all comes down to on the screen. In these different screens, it comes down to what is your risk-reward tolerance. As I mentioned, sure, it's great to hope to have that 44% return and earn that 153 net credit. The probability is so small you might not want to be worth it. Okay, a quick question that came in, and I'm going to break away from this because I kind of showed what I'd want. So remember, things such as married puts, collars, calendar calls, vertical spreads. If you're looking one stock at a time, I recommend using the search by symbol tool. Long calls and long puts, you want to use that optimized long option finder. Covered calls and naked puts, I recommend using the option chain. David sent in a quick question. Can you compare whether a naked put or bull put credit would be better for SPY for the same month? Yes, you can. All right. And the way I would do that, this is a different tool, but it still works if you're looking one stock at a time. And let's say I just wanted to compare a couple of bullish strategies on SPY. I want to look at maybe a couple examples of naked puts, bull put credit spreads that David mentioned. Maybe I want to look at some calendar calls or standard collars. So what I'll do is type in SPY at the top. When you first log on up in the symbol field, if you type in a stock symbol, you can quickly link to the chain. It would take you to the 5-strike call and put chain. There's a unique tool we have called the spread chain, which calculates credit spreads or debit spreads based on the midpoint, one stock at a time. The quotes link here, that takes you to the detailed stock research page. It shows you all the information we have for the stock. What we want to look at here is what's called the search summary tool. Now you can't set your criteria inside of the search summary tool for different strategies, but what the search summary tool is going to allow us to do is to view, a couple different combinations on the different strategies, one stock at a time. So you see here I have some of those already selected, David. When we go into that field, the strategy search summary, I've selected the checkbox for covered call. I got some bold call debit spreads, married put positions, which I wouldn't do 1 month out at a time. Bold put credit spread here, covered combinations, long call, calendar call, and naked put. All right, so you wanted to keep it simple. This is just a default. You see down at the bottom you can hit clear all, and you can select bullish, select bearish, or select neutral. But for your example, David, you just wanted to say, well, I just want to see naked puts and some maybe bull put credit spreads. I'll add bull call debit spreads in there as well, since they're the parity trade to bull put credit spreads. And once I have that, I'll select my date, March 17th, standard one, next month out. Let's click on submit. And here we have some combinations. Now these might not match specifically what you're looking for, as I mentioned, but we see we have some bull put credit spreads here. And actually these have a very high probability but a very low net credit. So I might want to expand that more by going to the one strike tool for bull puts. But we also have your naked put selections down here as well, with the out of the money range and percent naked yield, the probability of course, and then also the bull call debit spreads as well. So you can use this tool to get you started, the search summary tool, and then of course if you don't see the kind of results you're looking for, and what I mean by that is the stocks at 135.86, the bull put credit spreads we're starting with the 120, 116 spread, and then we go further out of the money. But I can use that more information button there to go directly to the midpoint spread chain here to kind of view other ones that might match your probability. But that search summary tool, David, that would be your starting point to compare different strategies one stock at a time. See what maybe matches your risk-reward tolerance and then move on from there. All right, so that's just a quick review of what I would do if I'm looking for positions one stock at a time in the strategies that we essentially voted on, of course. In the calendar spreads, as I mentioned, these other married put, collars, calendar spreads, use the search by symbol tool, long call. It's best to use that long option finder and then the option chain. All right, well, what if we don't have a stock? What if we have an idea of what we want to look for, but we don't know a particular stock? We just have an idea of criteria that we want to see. That's where we're going to use the patented search tool in any particular strategy. So let's go back to covered call. Now, as I mentioned, in any strategy, we can click on the search tool, and this will allow us to put in our criteria for what we want to see. Now, this is a specific selection that we looked at going 4 strikes out of the money for our presentation last Friday. Let me go back to the main default here, the initial value screen at the money. Now, the common questions I get from new customers trying out the site, well, there's 2 common questions, but one of the common questions is, well, what criteria would you use to look for a covered call? Okay, well, my base answer is that when you for the first time you log into covered call, you log into or click on a particular strategy and you go into the search, these default criteria that are listed below are essentially a starting point, where I'd say these are the criteria that I would start with to identify the positions. Now, your default criteria that you have in the case of covered calls, we have an initial values and at the money search. There's an in the money default search and there's an out of the money default search. And then these other 3 here, the price watch alerts number 1, that's essentially the default criteria that's used if you're looking for positions. I'm sorry, to the price watch alerts number 1. It's the default criteria that's used in that morning update email you receive. And these other 2, simulated CDs and stock price momentum, those are search screens based on your some of the tip sheets that are sent out during the first part of your trial. Now, down below, the 2 questions I get are, what criteria would you use, or how do I know what criteria are being used to identify these positions when I first clicked on search? Well, it's all there for you. Just scroll down to the bottom, and this takes you to the parameter field. Now, it may seem daunting at first, but don't be perplexed by it. I mean, there's a lot of criteria that you can use, but you definitely don't want to use every criteria if you're running a search. And also, you want to keep it simple based on what you're looking to do and what you're looking to accomplish. So let's say that, just for example, you're looking to do covered calls. And you know that right now what you're looking for is you're looking for just the next expiration month, or maybe covered calls that are no more than 60 days out in time. You have a minimum return requirement of, let's say, 3% and the minimum downside of 5%. And you want to look for stocks that are trading in an uptrend, maybe have a good average stock volume, and have a good option volume and open interest. Right there, that basic concept of what we might look for gives you 6 criteria that you can put in very easily just to identify the positions you'd want to see, or to start looking for the positions. So if you have any idea of even just 5 or 6 things you want to look for, when you first come into the search tool, just scroll down to the bottom. Ignore the results above. Ignore what's in the parameter field right now. Simply hit clear these settings. By the way, this works for every strategy, not just covered calls, but if you have an idea of what kind of credit spreads you're looking for, what kind of calendar calls you're looking for, the time spreads, whether you're looking for diagonals or horizontals, if you know 5 or 6 things that you know you're looking for specifically, just start off, scroll down to the bottom, and hit clear these settings. Now start off on the left, option expiration time frame. Well, I'm looking 1 month out, it's March, that's fine. But as I mentioned, I might be looking for a range of 0 to 60 days. So let me select all months from the option expiration time frame, and then down below, I'll just select the days to expiration to be 0 to 60. You can limit the range in the money or out of the money if you want to. If you specifically want to look for in the money positions for higher downside protections or greater higher downside protection, realizing that would be a lower percent if assigned but a higher probability, you could just put in a range. I want to be at least, let's say, 2 strikes in the money. Or maybe I want to be at least 5% in the money, 5% below the current stock price. Or if you're looking out of the money, you can use the show out of the money fields as well. A lot of times when I'm doing credit spreads or income strategies such as covered calls or collar spreads, to avoid any surprises, I might check this box for earnings date to be not between now and expiration. Don't want any surprises. And also, of course, if you're doing covered calls, you don't want to risk getting assigned early. If there's an ex-dividend date between now and expiration, well, you can select that field as well. All right, so what were the other things we said we wanted to look for? Well, we've got our time frame. We're looking 60 days out in time. Just check 2 simple things to avoid stocks that have an earnings date between now and the expiration date for the call, and also for the expiration date, ex-dividend date as well. Well, the center section of our greater than, less than fields is mostly our option information. Here are the calculations we referred to. So downside protection, I wanted that to be at least 5%. I want my percent if assigned to be at least 3%. And we said we wanted to look for some good liquidity, some good option volume, current option volume or open interest. So option volume today, I'll just put in 50 contracts. And open interest, let's look for a minimum of 100. These aren't recommendations or suggestions. You could put in 1,000 into the open interest if you want to, or maybe even 10,000 if you're looking at larger volume stocks, maybe such as Apple, for example, Amazon, Yahoo, things of that nature. All right, so I'm not even going to worry about anything else. There are other screens I can filter by here, Black-Scholes ratios and implied volatility over historical to see if the option is overvalued or undervalued, delta, time value, bid-ask spread as well. If I wanted to limit the bid-ask spread on the calls I'm selling or puts I'm selling, for example, I can select those as well. But we're just keeping this simple. These are the criteria I wanted. I wanted this return, this downside protection, wanted some liquidity, and what did we say about the stock? Well, one thing I didn't mention is that if I'm trading covered calls or naked puts, I probably have or married puts or even collars, the standard collars, for example, I have a price range I'm going to be looking for. My portfolio dictates that I'm really not going to be buying stock over $55 or $60 per share. Well, let's say you have a larger portfolio, and maybe you trade stocks up in the $100 price range or $120 price range. So we'll put in a stock price range of $9 to $120. I have a lot of fundamental criteria that we can use, and there's other things such as beta and fundamental and technical criteria, RSI, Bollinger Bands, but we're going to keep it simple. I had a minimum average stock volume I want to look for. This average stock volume field, by the way, is measured in thousands, and anytime you hover over a parameter or you click on it, it will take you to the glossary. But if you hover over it, you'll see a pop-up definition, and it will tell you the description for that particular screen. So this would show you that it's measured in thousands. So let's say that my requirement is I only want to see stocks. Hold on one second. There we go. I only want to see stocks that trade at least 750,000 shares per day. Just plug that in. I said I wanted to look for stocks in an uptrend. So in the simple moving average drop-down field, I can specifically look for stocks here. You know, you have different moving averages that you can select, but I'm going to select stock price. Then I can select the stock price to be greater than the 20-day moving average, 50, 100, or so forth. So let's just select stock to be greater than SMA 50. If we add that all up very quickly, 1, 2, 3, 4, 5, 6, 7, 8. Really, I only put 8 criteria, technically 10 if you include the earnings date selection and the ex-dividend date, avoiding stocks there. That's only 8 criteria. There's probably close to 80 different criteria that you could put in the screen, but we kept it simple. We just put in 8 different criteria. Now I'm going to hit submit these settings. The system's going to go out now, scan the entire universe of options, and show me only those positions that matched my default criteria. Now we all know there's about 3,500 optionable stocks, and roughly on those 3,500 optionable stocks, I think the total count is close to about 300,000 various calls. So that's a very large amount of combinations that you could use. But just that basic criteria, I've narrowed the entire universe down to only 89 results. 89 total results. Now only the first 20 are shown. I chose to sort it by percentage of assigned, but if I wanted to restrict this further, for example, I could swap it and I could just sort by downside protection. So we only have 89 calls that match that base criteria. That's a great starting point, but I probably want to filter this down more. When I'm running a new search in any strategy, I probably only want about a dozen to 2 dozen results. Now, how might I filter this down further? Well, let's just take the first one, McMurrin Exploration, MMR. Current stock price is $13.87. We're shown we could sell the deep out of the money April 16 call for 95 cents, excuse me. This would give us a downside protection of 6.8%, a potential percent if assigned of 23%. Well, we only have a 33% probability of the stock moving from 13.87 above 16 by April expiration. Well, okay, this is a little bit too far out of the money for me. If I'm looking for new positions on stocks I like, I probably want to be closer to at the money. Well, I know that I can restrict that 3 ways. You can restrict it to look for out of the money by increasing the minimum percent if assigned, percent if unchanged, or downside protection. I could use the delta, of course, to force it to be, if we have an at-the-money option, we're typically having a delta of 0.5, so I could restrict the delta just to be between 0.4 to 0.6. While I mess around with all that, I can just tell the system, look, I don't want to be more than 1 strike in the money, so in the show in the money field, I'll go blank to 1 for number of strikes, and for show out of the money, I don't want to be more than 1 strike out of the money. So we'll go show out of the money, number of strikes, blank to 1 as well. We could use percentages also. If I only wanted to make sure I'm no more than 5% out of the money or 5% in the money, I would just put in blank to 5 for percent in money and blank to 5 for percent out of money. Once I've made that change, we'll click Submit. We're keeping the same criteria. We didn't narrow it down too much, but we took out about 30 results. We're down to 62 results now. Okay, so we've narrowed that field down. And again, there's other criteria we could use. We didn't do anything for the earnings per share growth or price to earnings. You could always add more criteria to further narrow this down. But the important thing here is that you want to keep it simple. If you're an options trader, you're using PowerOptions, you probably know 2 or 3 strategies that you're interested in trading. And on those 2 or 3 strategies, you probably know what kind of criteria you're looking for. Those of you that answer that you're trading the long calls and puts, for example, you probably know if you're looking for a long call that, well, very similar settings. You might want to be looking for stocks that are currently in an uptrend. You might have a limit of how much you want to pay for the ask price on the call option. You probably want to see some volume and liquidity. Your time frame is probably going to be further out in time. You're probably looking for calls that are 90 days or more out in time to give you more time for the stock to move in your direction. And you're probably also looking for stocks in a certain price range or range in or out of the money, or maybe options, call options that have a certain delta. That criteria alone is easily going to help you narrow down the search. Okay, but if you wanted to narrow it down further, remember we talked before, if let's say that I had a certain stock list I follow, maybe I follow the Standard & Poor's S&P 500 or the S&P 5 stars, in the center section you have a drop-down menu here for recommended lists. And here we see I can choose to screen just against any stocks on my watch list, number 1, number 2, or number 3. We could look for just those stocks in the IBD 50. We could look for stocks in the S&P 100 or just in the S&P 5-star list. There's also some value line lists as well. And of course, at any time, if you wanted to search for just those positions that offer weekly options, it wouldn't work for our search criteria because none of the stocks that offer weekly options right now would probably offer that return of 3% if assigned and still have a 5% downside protection. We're not going to see those values on the weekly options right now. But I could select just to screen against stocks that have weekly options also. And this is in any strategy. The same criteria setup that's here, the parameter field, for example, where you have your expiration time frame over on the left, your range in or out of the money, avoiding the earnings date, and then the option criteria for that strategy in the center section, and then over on the right is your stock selection. That's going to be the same on any given search. Okay, so for example, right now, if I linked over to, let me save this now. We don't need to save it real quick. Yes, we do. Let's save it real quick. Say 22nd? Yes, it is. Okay, very good. So let's just save that search. Now, every time I come back to the covered call menu, I'll be able to pull up this specific search that we just set up, and it will remain it as well. Oh, Marvin wanted to know, how do you keep the IBD current and updated as it changes weekly? We generally try to keep up with that as best we can. So we'll run a filter in the background to update the stocks in that list when IBD releases it. Sometimes we might not get every change. For example, sometimes they change during the week, and we might not get that one. But usually once a week, that IBD 50 list and the canceling lists are updated. I don't know if the canceling list is updated as frequently, Marvin. I'm not positive on that. But yeah, we try to update that as best as we can when they are released. Okay, so very quickly, let's navigate over to Bull Put Credit, and we're going to click on the search. But I just want to do this to show you that it's the same field. So again, we click on Bull Put Credit. We see a list of potential trades, and the question might be, well, how did these results come up? If you simply scroll down below the results, you can see the parameter field. And we see we're looking at March expiration. We're forcing the put to be the short put in the Bull Put Credit spread to be at least 5% out of the money. We're only looking for those spreads that do on stocks that don't have an earnings date between now and expiration. Minimum 10% return. We're looking for some bullish criteria, stocks that have an earnings per share growth of at least 5%, PE ratio of greater than 0, probability of greater than 70. But again, if you had other requirements that you wanted to limit the strike difference, you only wanted to see 5-point spreads, you could set that in the strike difference field. I'd select strikes equal to 5, or maybe you want to look for strikes less than 5, maybe 2.5 or $1. In the center section, we have similar criteria, right, for our options. The percentage return for the spread, minimum net credit, option volume and open interest, different implied volatilities for the sell and buy option, Black-Scholes ratios, the short option delta and long option delta, and of course the maximum monetary risk. You can still select the simple moving average. You can still select to just look for stocks again and say the S&P 5-star list, S&P 100, or the NASDAQ 100, depending on what you're interested in. So it's really simple. Don't get overwhelmed by the amount of criteria that's there. The best thing to do is, if you're starting off in a new search, you know a few criteria, go down to the bottom, hit clear these settings, enter in those 5 or 6 criteria you're interested in, run your search, and yeah, this is too many, 193 results. I'm going to start tweaking that criteria to narrow this down to a more manageable field. All right, so what do we do once we've set up the search in a given strategy? We have our criteria, maybe run our search. Well, I know that these 73 results now for this search we created, we're back in the covered call screen, match my criteria. But I still want to do further research and analysis. I'm not going to take this first position on FIO just because it matches my criteria. What I'm going to do is click the little more information button here on the left next to the first position, and this is where we'll do our further research and analysis. The first step I always do is I'll go to stock chart. I can look at a 1-year snapshot, or I can look at big charts. You can customize big charts using different indicators. So if I selected this first one and I went to big charts and I suddenly decided that I didn't like the chart for a covered call position, no problem. I would just close down that window, come back to the screen. I'm done with the first selection. I'm not going to further research that any further. If the stock chart doesn't match my level of comfortability for that particular strategy, I'll just move to the second one. I'll take a look at that chart, see if that more or less matches my criteria. One thing I want to do very quickly here while we're in this search, and when you run any search, and sometimes you see it here, well, you may come across some positions where, okay, I have stocks for covered call, but I also have a bull 3 times ETF, the TNA, and this is a little more volatile, has a lot more movement on it. Well, let's say I just wanted to look at the stocks, and I wanted to remove any ETFs that came up in the search results for covered calls or indexes and ETFs from my bull put credit spread. I just want to focus on the standard stocks. No problem. We'll scroll down to the bottom again. Right below that recommended list section, there's a drop-down menu for remove stock lists. So I can just remove stock lists, and I'm going to choose to remove all indexes and ETFs. Let's just go ahead and submit that again. So now we'll basically have many of the same positions we just had. Okay, there's that Fusion IO, there's NXP, Manitowoc, for example, but those ETFs have been removed. All right, so I can just focus on the stocks. Okay, so after I look at the stock chart, I've identified a stock that matches my criteria. I'm always going to check the company information and the news. I want to take a look at the recent news headlines. Is there any headlines out there in maybe the last month or so? I'll scroll through the recent headlines. Is there anything that might cause me hesitation to enter this as a spread position or as a covered call? Is there any rumor about a buyout opportunity? Is there any reference to a boardroom scandal or ousting a CEO? Is there any reference to a patent lawsuit, for example? Anything that might cause me hesitation to enter the position. And again, if I see a recent headline within the last month or so, something that might cause me hesitation to enter the position that hasn't been resolved, I'm done with this stock now. I'm just going to move to the next one. Okay, see if that stock chart on the third one matches my criteria, and then if the news, the earnings events, and maybe the profile matches what I'm interested in. Oh, fantastic. We're at that point now. I might go to the research next. The stock research and the option research, this takes you to that quotes page we had mentioned before. It just shows you all of the data we have available for the stock or the options, sort of a bird's eye view of everything. So it's very helpful sometimes, but unless you really want to get down to the nitty-gritty, it might not be as essential. And then for a covered call, what I might do next is let's talk about NXP. Let's say I like the chart. I didn't see anything in the news that would cause me hesitation to enter a position. I like the earnings. I like the profile. I looked at the research briefly. But remember, what I might also want to do now is, well, this shows me here on this first page that we're looking at the stock at 23.53. We're looking at an April 25 call, which has a potential return if assigned of 12.5% and a downside protection of 5.5%. Well, I don't see any others directly on this page. There might be others in the results. But what if I like the stock and I want to see now, okay, well, what happens, what about the March 25 call? Is there a March 24 call I could use, for example? So I'll just click on the option chain from that field, and this will give me that comparison. So we link to the option chain. We see here that I do have a field highlighted in red, or I have an option highlighted in red. What this is showing me, of course, is this is the option I clicked over from the search. So it gives me a reference point of which option I was just looking at. Well, we don't have a 24 strike, but we do see there's a 22.5 strike for April, which would result in a 6.7% return and a potential 10.4% downside protection. And of course, going back to March, now instead of the April, the 25 strike offers a 2.5 downside protection and a potential 9% if assigned. We still have a lower probability of earning that return. But the shorter term 22.5 does still have about a 7% downside protection and a potential 3.5% return. So it's a little bit safer, but it still matches my 3% return. Okay, so this is just allowing me to compare. Okay, I did like the stock. I'm entering and I was looking potentially at this covered call, but maybe I want to be a little bit safer. Maybe I want to look at the March ones. This would offer also a higher annualized return if I'm able to trade in March as opposed to April. So you can use the option chain just as we did before now to compare the different strikes and see which one best suits your risk-reward tolerance now that you've done some of the research and analysis on that position. Now in that key, if we had run the search as we talked about before in a bull put credit spread or the calendar call, collar, married put, and we found positions that matched our criteria, instead of going to the option chain at that point to compare other strikes, you'd have a link in the More Information button to go ahead and access the search by symbol tool so you could compare different strikes, the different returns, and the different probabilities on that same stock. All right. Now the one thing I'll always do before I'm getting ready to enter the trade, we already had our information, we did our research and analysis, our due diligence after the search tool identified the stocks that matched our criteria. I always want to take a look at the profit and loss chart. There's a couple of reasons why I want to do this. Number one, well, it gives me the graphical interpretation of our position. Number two, what if I wanted to evaluate, well, okay, we're talking about this position here, selling the April 25 call, potential 12.5% return. We had about that 6% downside protection. But what if I wanted to know what my covered call might look like in this case if the stock was trading at, if it jumped up to $25 in the next 10 days? Well, down below that profit and loss chart, you have a field here where we can calculate expected profit and loss. So I'll put in $25, and yeah, let's say 10 days from now, and let's say right around the 9th of March. What if the stock was up to 25 by March 9th? Well, we see that we would have a gain on our stock of about $147, but of course the theoretical price of the call would move up to $175, so this would work as a negative to us. We sold it for $135. At this point, we'd have to buy it back if we were considering liquidating it at $175. So we would still have a gain on our position, be a gain of about $102. All right, what about the other side? What happens if the stock drops down to $20 in the next 10 days or so, or 20 days? Okay, we'd have a loss of $353 on the stock, but theoretically the call might deteriorate down to 19 cents or $19. So we'd still have a loss of $242 per share. Okay, well, let's say that, so that's one of the reasons I want to run my what-if scenarios before entering any position, whether it's maybe a married put, or whether it's a call, or whether it's a calendar spread, or whether it's just a covered call. I want to use that profit and loss chart to run my what-if scenarios. Now, this linked us into the custom spread tool. Now, let's say I was interested in this position, but I wanted to add some security to it as well. Realizing I'm going to give up a little bit of profit, but perhaps maybe I want to turn this instead of a covered call into a collar spread. And those of you that know me, of course, know that I don't trade covered calls anymore. If I'm looking at a position that I'm looking for just a 30-day return that I'm hoping to get assigned, I always open it as a standard collar position. That's just my personal risk-reward tolerance. Everyone has their own. But okay, let's scroll up to the top here, and we see we have our information entered from the search tool. We have our stock, 100 shares at the current price, and we have our call option, the April 25 call, sold for $1.30, one contract. Well, you can change this if you wanted to evaluate the monetary values. If you did 500 shares or if you did 1,000 shares and 10 contracts, you could change the quantity. But what I want to do now is in this custom spread view is I'm going to click on View Options, and this pulls up a collapsible chain. Now, just eyeballing it, I'm selling an April 25 call that's slightly out of the money. But if I wanted to add some protection, I'll click the arrows over here to the left to open up the April chain. And let's say I just want to add in the 20 strike put trading at about 65 cents or 75 cents. So I clicked on the link for the put. It shows me that it's been added. So I have my stock buy, call sold. I have my put. I'm going to leave the action at buy. We're just going to put in one contract. Now I'm going to leave the price field blank. And what that does is if I selected to buy this particular option, it'll grab the natural ask price for us at 75 cents. If I selected to sell, it would have grabbed the natural bid price for us at 65 cents. So I'm just going to leave this blank so it'll grab the ask price at 75 cents. Click on Submit. All right, now what do we have? Well, we've changed the dynamic of this position, but I still have the potential return of 8.8%, which matched my criteria. But now, if the stock gaps down against me or suddenly moves into a volatile swing or the market as a whole gets pulled down over the next 60 days, I've set a floor to my maximum risk. I can only lose 13% if the position moves against me, and looking for a potential profit of 8.8% if the stock had moved above 25 and we were assigned. So I might be more comfortable with that personal risk reward. All right. Now, once I've run my what-if scenarios here and maybe looked at some different versions, looked at some different SKUs using the custom spread tool, I'd want to add the position into the portfolio. Now, if you decided to stick with the covered call, after you've done your research and analysis, of course, you come back to the search screen. All right, we've done all our research and analysis, and the next thing I might do is use the broker link here to enter the position as a covered call. Now, our broker link, unfortunately, only links to Options Express and Brokers Express. If you're using a different broker, you'd log on to your broker and put in the requirements. You want to buy stock at around $23.53, sell the April 25 call for maybe about $1.30 or so. But once you've entered your trade in your broker, you could come back here and click Add to Portfolio. that would link the position into the profit and loss portfolio so you could start tracking that trade. Now, of course, if I'm in that custom spread and I added in the collar, I adjusted it by putting in the put option to change it to a collar spread, and I'm more comfortable with this. Again, same feature. I can link to the broker link for the different setups here, to buy the stock or to enter the covered call using the broker link menu. And then once I've entered it, I can click the text link up at the top to add to portfolio for this collar. So I'm going to do that. Let's click on Add to Portfolio. If you have yet to set up a portfolio on PowerOptions, you'd only have this first choice, New Portfolio Number 1, and you can enter a name such as My Collar Spreads or My Income Strategies or Fidelity Account ABC. And just put in a name for your portfolio. If you're opening a new portfolio from scratch, it was going to create a portfolio for using a starting basis and a cash on hand of $100,000. Okay, for our example, I'm going to go ahead and put this just into our, this one called Trades. Now, you know what? Let's create a new one. Now, I'm sorry, I'm going to put it into paper trading, I think dividend and covered calls. I think I'm going to put it into that default portfolio. Let's go ahead and click Insert. Now, if you had linked to the position from the search tool, it knew you were looking at a covered call. So you'd say, you'd have a field here that says New Covered Call Position in Paper Trading and Dividends Covered Calls Portfolio. And you'd have your stock entry and just your option entry. And all you could do here is you just want to put in your commission fees if you want to track that, your quantity, and if you got any different prices. This is still a collar, but since I linked from the custom spread, it didn't know what exact strategy I was viewing. So that's why I have the 4 legs here. But if you just link, let's do that very quickly. If I just linked over from the covered call search and clicked Add to Portfolio and selected the correct portfolio to put it into, we would just see a simple covered call entry. So new covered call position, here's your stock, here's your call. You just put in your number of shares, let's say 202. Your commission fees, if you want to track them, this is a paper trade, and this is not a recommendation or suggestion of a collar or a covered call to open, of course. So just put that information in and click Submit. And now we see, well, this is we have a portfolio here. We have 1 long stock, 6 covered calls. It's linked by strategy, so I always have the strategy legs for the same stock linked together. Here's my new covered call on NXP down at the bottom. And we see we have other covered calls listed here as well. Down below I have 2 different collar positions that we're tracking with March expirations. Paper trades only, those aren't real trades as well. The commission fee is just your total commission fee. Scott asks, is commission fees as in a per share amount, per contract, per trade? Well, example, let's go here. Okay, this is just going to be the total amount of commission. So if I was just doing 100 shares of NXPI with, remember this collar, let's say my stock commission is $9.95 for 100 shares, so that's going to be the commission I enter. Let's say my option commissions are $7.95 each, so I put in $7.95 and $7.95 as well. So it's the total commission cost, okay? But let's say that I had a different commissions if I did 200 shares. All right, so let's put in our 200 shares. 2 calls, 2 puts. Well, let's say my stock commission stays the same. It's $9.95 up to 1,000 shares. But when I sell an extra call, my base commission fee is $7.95 per contract, but maybe $1.50 for each additional contract. So this would actually move my commission fee up to $9.45, and my put commission up to $9.45 as well. And that's how you'd want to enter it there. All right, let's just get rid of that for now and go back to our menu. Okay, now, as I mentioned, we see here that this is just a paper trading portfolio, so my starting basis is listed as $100,000. I have $33,000 remaining cash on hand. If you wanted to create a portfolio, let's skip track very quickly here, and then we'll come back to this. But if I wanted to create a portfolio from scratch that mirrored my personal trading portfolio, I want to enter my positions in manually, what I'd want to do is go into the Setup field, and this shows me all my portfolios. But let's say right now you have a Fidelity account or an Options Express account, and when you look at your positions, your total portfolio value right now is about $50,000. Well, that's what I would put in. When I click on Setup, you have a new field here where you can enter new portfolio. So I'd call it OX trading account. And if I knew right now that my liquidation value of my total portfolio is around $50,000, I would use that as my starting basis and copy that over. I'm sorry, my cash on hand, and copy that over to my starting basis as well. Then when you click Submit Changes, you have that new portfolio added into the field. Okay, so if you're just getting started out with PowerOptions, you want to start mirroring your actual portfolio, just click on Setup, and it won't be as busy, of course, if you haven't created a portfolio yet. You'll only have that choice to name your new portfolio there and put in your cash on hand and starting basis. Once you've done that, you're still in the Setup field, but just click on Profit and Loss Portfolios, and this will take us back to the new account we just created. Now, why did I want to create it with a cash on hand and starting basis, essentially based on my current liquidation value of my portfolio? Because now I would manually start entering in my positions that I currently have open, and as I do that, the cash on hand is going to reduce. So very quickly, once I've created a portfolio and I want to start entering my positions, let's say that we had a covered call on Apache that we looked at earlier. Well, real simple. On the menu here, which says Enter a New Position in this portfolio, I'm going to select Covered Call from this drop-down menu. That's going to take us to the same entry page we just saw. There's going to be no data filled in. Well, okay, I know what my data is for my brokerage account. I bought Apache, and let's say I bought 100 shares, and let's say I bought this back on February 14th on Valentine's Day. Put in my commission fee of $9.95, and I would know what my price per share is. So let's say my price per share at the time was $104.13, for example. All right, now, I also know that when I open this position on March, I know which option I sold. So on that call link, I'm going to click the button for Select Option, and this takes us to a similar trade. Now, it first comes up with the weeklies. Well, I didn't do a weekly trade. I did the March. So I'm going to select the March header down here. All right, and those are my available calls. And let's say when I bought the stock at 104.13, I had sold the March 110 call for around $250. It's priced at $350 right now because it's in the money. We sold it for about $250. So I'm going to click on the 110 call. It's a hot link there, so then that puts in the information. We sold one contract. We sold it on the same date, February 14th. My commission fee, let's just say it was $7.95. I changed my price. Okay, I'm going to change that to $2.50. All right, so very simple. Let's click Submit. Now we have our one covered call for Apache entered in the position that we opened on February 14th. Now, you notice that I have a box checked up at the top for View Position Analysis. Let me uncheck that very quickly. And this shows us our covered call position. Okay, it shows us as the link spread. Remember what we saw in that other portfolio? We may have multiple covered call positions, and we had a couple collars and a long stock. Well, we're going to link it by strategy and by position, so you always have the two legs or the three legs of that strategy linked together. It's not spread out like it might be in your portfolio where the two positions aren't linked, or the two legs aren't linked. Well, I have my original issue price, about 100 shares at $104.13, and we sold the March 110 call for $250. And then we see our current price. Well, the stock's at 110.81, so it's moved up $6.58, and our call's priced at $3.40 if we went to buy it back right now, so we've lost about $98 on the call. Well, it's great to see things as individual legs, but what I'm more interested in is tracking my married puts, my covered calls, naked puts, not naked puts per se, but bull put, credit spreads, and collar positions as a whole rather than the individual leg. So when I click that field for View Position Analysis, it's going to add 6 extra columns onto the portfolio. And this shows me the position as a whole. So we have my original position cost, total cost of my stock minus the call option, including the commissions, was $10,181. The original expected gain was $819, or 8.1%. Again, if the stock's trading above 110 at March expiration and I'm assigned. Right now, my current liquidation is 5.3%. So if I sold to close the stock now and bought to close the call, we'd have a gain of 5.3%. And if we hold this position all the way to expiration, and the stock's still trading at the same price. It's not a projection of what your turn would be in the expiration value and expiration gain or loss. Just calculate it based on if the stock stays at the same price, what would your return be? All right. So I like to view this. So it shows me exactly where I stand right now compared to where I might stand at expiration and what was my original expected gain or loss. Now for positions such as long calls, long puts, married puts, for example, you won't see a field here for original expected gain or loss because essentially you didn't have one. It was unlimited with the long call and the married put. You had an infinite potential original expected gain or loss. So you have nothing capping the upside where a return can be calculated. But for the other strategies we talked about, calendar spreads, bull put credit spreads, bull call debit spreads, collars, and so forth, we'll have that field there as well. All right, now some of the other features that we can do. When I first opened this trade, well, I might have done something such as set a contingent order at my broker or a stop loss order, and I can do that here as well. So in the third column of our portfolio, this is the profit and loss portfolio. Remember, we track our open positions. This is an open position because we haven't reached expiration yet. I have an alerts column with a text link for view. So when I click on view, it's going to take me to a page where I can set various alerts. All right, so if I wanted to be notified if the stock had dropped below $100 per share, or if the stock had moved above $110 per share when I opened this position, that was the strike price that did we sell the 105? No, we did the 110, yeah. Well, let's say if the stock moved above 110, I'll set that as an alert. There's a default here for this particular strategy to show me if the option has dropped by 80% of its value. This is just a common criteria that's used in some of these income strategies, the naked puts, the covered calls, even the credit spreads, that if my short option, the option I sold, has dropped 80% of its value, I've made 80% of the premium I expected to make, I might want to go ahead and close the call at that point, sort of the 80-20 rule for option selling. So that's set as a default, but I can remove it. I can just uncheck that box and remove the percentage decrease. Let's go ahead and keep that in there as well. So you can set various legs for the stock price change, the option price change. Hey, days to expiration. I find this one very handy in all my positions in my portfolio. I want to be notified if I'm within 5 days to expiration. What I really find helpful, especially if I'm tracking 8 or 10 different positions, is down here at the bottom where you can set alerts for the stock fundamental and technical criteria. If the stock moves above or below a simple moving average or above or below a Bollinger Band or so forth. One thing I always want to do is I lose track of this, so I want to be notified if I'm within 5 days to earnings, or if I'm doing a covered call perhaps on a dividend stock, I might want to be notified if I'm within 5 days to the ex-dividend date. So once you set the various alerts, just click Save. Okay. Oh, something happened. The alerts column is now highlighted for us on this Apache position, and I see that it also triggered in my upper stop limit for the stock. Now we set an upper stop limit of 110, which was our short call strike price, and the stock's now trading at 110.81, so the portfolio is telling us we've triggered an alert. Okay. Scott, this is a question I was going to get to in a minute. But yeah, where do the alerts go? Email, SMS, both. Unfortunately, the answer to that right now is neither. We don't have something set up in the portfolio at this time where it sends you an alert if the stock has hit your trigger point via email or SMS, for example. We may do that in the future. In general, your broker should have that. Okay, your broker should have that set up to where if you trigger an alert, it will send you an email or such. We do plan on doing that in the future, but right now the programmers are working on a lot of other things and probably won't be able to get to the portfolio enhancements we have planned for maybe another 3 or 4 months. All right, so at this time, I look at my portfolio, what has happened, an alert has been triggered, so I might want to take action. And by the way, another thing, Scott, when you first log on to your account, if you have multiple portfolios, you don't have to go into the profit and loss portfolios and look at each individual portfolio to see if an alert's been triggered. Remember, one of the submenus under the portfolio is that alert summary. So when you first log on, you can go to you can go to my portfolio and then just click on alert summary, and this shows you that of all your total alerts, there are 2 alerts that have been triggered out of 20. I say, oh, there's an alert for the Apache covered call position. I can click on that link, and it'll take us right here. Now, why would we want to come here if an alert's been triggered? Well, remember we talked about at the beginning, the portfolio tool not only helps you track your open positions, but it also helps you with the management and adjustments. Okay, so once I see that an alert's been triggered, I link to it there. I can go ahead and click the More Information button, go to Position Actions, and of course you can see here, this is where I'd make my adjustments. If I want to roll the leg, roll the call, close the leg, add a dividend, for example, or add an option leg, if I turn this into a collar, we could do that as well. What I want to link to very quickly is the Position Analysis tool. The Position Analysis tool will give us a breakdown of our current position, whether it's a covered call, a married put, a long call even, bull put, credit spread, calendar spread. Well, we see we have the breakdown of our position. Here's our standard profit and loss chart. The stock has now moved above the strike price of our call. And we see our current option ask price, our delta, time value remaining, our days remaining to expiration. I scroll down a little bit further where we get a little bit more detailed information onto what we saw in the portfolio. There's my original expected gain and my original cost value, my current liquidation return at 5.3%, and that shows me this is 67% of my total expected profit. And then again, that future expiration value if the stock's at the same price is about 7.9%. I don't want to say trick question, but why is there a difference between my original expected return and the future expiration value? Well, the future expiration value is assuming that, well, if the stock stays at this price, you're going to get assigned. All right, so you're going to get assigned at that 110 strike price. Well, that's great. You make the profit of 809, but you're also going to get charged a commission. So this 7.9 is actually recalculating the commission fee if I was assigned at expiration, whereas the original 8.1% was just the static covered call return we saw from the search, not including your commission costs. Okay, well, that's all well and good. We saw some of that before. It just gives us more information. But what this tool really does is if I scroll down further, it calculates for us potential rollout opportunities. I see here we're shown that we could buy to close our April 110 call for 340, and I could roll out 1 month and sell the April 110 call, collect a premium of 525. Now this would give me an adjusted net credit of 435, but increase my return to 10.2% if I was assigned at 110 on April expiration. I want to pause here for a moment to talk about something very important that I feel is very important for these positions. It's very powerful to have these rollout opportunities calculated for you so you don't have to do it. But you always want to keep in mind what are your goals. And what I mean by that is this one probably matches the goals. Remember, if we held that we could liquidate for 5.3% right now, but if we held to expiration, March expiration in 24 days and the stock was trading above our price, we'd potentially have an 8% return. Let's just round it and let's call it an 8% return. If I roll to the April 110 call, I'd gain 10.2. I'd gain up to 10.2 potential percent if assigned. So I'd gain about 2.2% potential return if assigned for 35 days. We have 24 days to March expiration. It's 59 days to April expiration. So for 35 days, we'd increase our return by 2.2% if the stock stays above 110. I just want to make a comment here about being careful of rolling for the sake of rolling. Remember when we talked about that initial covered call search and we discussed that my minimum potential return was about 3%. Well, if that's my goal every 30 or 45 days, rolling to this potential call right now doesn't make sense to me because it's only increasing my potential return from my future expiration in March by 2.2% to April. That's not matching my personal goals. You don't want to get caught in rolling for the sake of rolling. You probably want to look more at the April 15 call if and only if you're still bullish on the position. Of course, honestly, with this trade, there's nothing wrong with liquidating and taking the 5.3% gain after 8 days or holding it for the next 24 days if we still think the stock's going to be bullish and taking that 8%. Probably don't even need to roll. But just because a rollout opportunity is calculated for you, don't feel that you have to roll for the sake of rolling. You still want to apply your personal goals and expectations to that adjustment. Now, it's great to see it numerically here on the rollout, but a lot of us are more graphical, and it's better to see some of these rollouts in the graphical interpretation. No problem. Anytime you're viewing a rollout opportunity in a given strategy, click that little blue button next to the trade and go to Simulate Trade. The Simulate Trade feature gives you a side-by-side comparison. Over on the left in red is where our position stands right now. We have that 5.3, 5.5% current return. The max return at April expiration is about, March expiration is about 8%. And we're shown if we buy to close our current call and roll up to that April 115 call, Our potential max profit now is moved up to 12.5%. We've changed the strike price, so we've probably lowered our probability. And what we did here is now if we get assigned at 115, we're going to have that higher potential percent if assigned on the position. So we gapped up our gain, but we're still bullish on this. This is more of a bullish adjustment, and that's perfectly fine. But these tools help you analyze that on the fly, whether you're doing a married put again, whether you're doing a bull put credit, even if you're tracking a long call or the other positions, you'll be able to see some of the calculated rollout opportunities and then compare them side by side. Oh, and if you decided at this time that you wanted to apply this roll to your portfolio, very simple, down at the bottom you can click the button to submit change to portfolio, and that would take care of everything in the background. You'd buy to close your short call and sell to close the long call. So when we looked at the profit and loss portfolio after we clicked this button, we'd still be tracking a covered call on Apache, but we'd be showing the April 115 call, and the March 110 call would no longer appear. Let's do that for the sake of argument. Let's click submit change to portfolio very quickly. All right, so there we are. Now, I haven't changed the alert, so it's still showing me the alerts triggered because the stock's above 110. I'd probably change this now to the upper stock level to be 115. We're still tracking our position. We've got a 115 call sold against Apache. Now notice that my effective cost per share on the stock has changed. It's moved up from 104.13 to 105.19. Why did that happen? Well, because we paid $1 to buy back the call. We originally sold the first call for $2.40. We bought it back for $3.50, so that adjusted our effective cost per share of the underlying stock. That was taken into account when we looked at the comparisons of the new potential percent if assigned and the new potential return. But where did it go? I can't see it here. Well, that's okay. Remember, the profit and loss portfolio only tracks your open positions. I can view where my closed position is in the historical reports, but what I probably want to do is go into analysis. The reason I like going into this analysis field is it shows me where I stand right now. So the two positions that are highlighted in red, these are my open positions that I haven't closed. The position I have highlighted in white, that's the one we called. Our original sale price of $242, well, it was $250 when we sold it, minus our commissions. And then our buyback cost, we paid $340, but we added that $7.95 commission back in. So we did have a loss of $105 on the call. However, our stock has gained $6.58 since we opened it. Oh, and why does my short call, the one I just rolled to, have a loss of $5 on it right now? Bid-ask spread. Very simple. That's all that is. But this analysis view shows you all the open and closed positions for the stock listed by stock. Let's change portfolios very quickly. Let's go to that paper trading, dividend, and covered calls that we entered. So you see here of all those positions, we can see our open and closed positions listed by stock for a quick view, and then we can see the total profit on the entire leg listed here in the summary field. Now also, of course, when you're in the position analysis tool, there's a history link down at the bottom. We didn't see that really on the Apache trade because we didn't have any history until we just made that adjustment. All right, so, but as I track the position further, let's go back to our profit and loss portfolios. Again, okay, I want to change this alert, so real simple. I'll just go back into the alerts field. Got the 115 call, so change that to 115 and click save, and we're all set. All right, so now no alerts are triggered because we just applied that roll. And now we can move forward. So you can easily enter the different positions into the portfolio from the search or from the custom spread. You can easily enter them manually from that drop-down menu in any portfolio you create. Just select your strategy. That will take you to the entry field. You just put in your stock symbol, point and click on your options, and then enter your prices, and then you've got your positions entered in the portfolio tools as well. As you close and roll the positions, again, they'll be available in the historical reports and the analysis. And you can also take a look at the allocation view and snapshots also. All right, well, I went a little bit longer than I planned on. It's about 1:23 here. I usually try to wrap up at about 1:15. And, of course, so we just want to summarize. If you have any last-minute questions, go ahead and send those in, and I'll try to take care of those as well. Oh, Marvin, that's easy. I'm sorry. Let me go back for Marvin's question. I didn't see that until now. It's really hold on one second, Marvin. I apologize. It's really simple. Let's say from scratch now, if you just went into the setup field, again, you might only see this field here at the bottom that says one entry for new portfolio number 1. If I create a portfolio, remember when we created the OX trading account, it still leaves a field open for new portfolio. So you can create as many portfolios as you want. Just start in the setup page and start creating portfolios. Every time you create a new portfolio, you'll see a new entry here with new portfolio 0 and 0. So what I would do is a lot of times I go through, if I'm testing a new strategy, I'll have bull put paper trade portfolio, bull call debit paper trade portfolio, naked put paper trade portfolio, and so forth. Okay. And oh, Scott, yes, you do have the back testing available during your trial account, so you have access to the back testing there as well. So Marvin, yeah, after you've set up more portfolios, you just add those in there with the different names, and you'll be available to view them also. And at any time, of course, I can delete a portfolio if I'm done with paper trading it, for example, or anything along that nature. We can do that as well. Okay, 1 second here. Let's get back to where we were. This is self-explanatory. I don't think I need to summarize it. Why Power Options? Why do we think it's the most powerful tool out there? Well, we showcase that today. Patented search of 23 different strategies gives you complete flexibility to only identify those positions. In addition to customizing the criteria, you can also customize the results view by clicking the See More Less Columns button. Tools to compare the various strategies. We saw that strategy search summary tool. Whenever I run a search for covered calls or the given strategies after I've identified a particular position, I decide I like the stock, I can go to the option chain of the search by symbol tool to compare other strikes. We also offer toll-free customer support during market hours, and you can email us at any time. That historical data is an extra fee on the regular subscriptions, but you have access to it for free during your trial. And, of course, all of our help articles. And it's low cost. 20-minute delayed service, access to all the tools in all different strategies. What we discussed today is only $60 per month. We do offer a real-time service. It's not streaming real-time, but every time you refresh the page or submit a search, you get the numbers at that very instant. That's $80 per month. Of course, the real-time service with the historical upgrade is $100 per month. That gives you access to the real-time quotes with unlimited access to your historical suite of tools. There's a discount available for the yearly subscriptions as well. We talked about the Power Store there, educational products, those 2 books there, the low-cost books loaded with information, the Naked Puts book, the Protective Options Strategies, and Iron Condors. These are about $14 to $20 each. They're loaded with information on the strategy written by the Power Options staff, and they also include discussion on how to use the Power Options tools to implement those strategies as well. Now, what we talked about today, of course, is a set of tools that's designed for self-directed options investors. If you're not self-directed quite yet, you may want to go ahead and check out Power Options Applied. They do the work for you. They select the trades, Iron Condor portfolios, covered calls portfolios, and then they email those to their customers and if they're making adjustments. And those of you following the more protective strategies, of course, you can follow the radioactive trading techniques. Kurt Frankenberg, author of the blueprint, you can look over his shoulder and follow the radioactive trading techniques as well. And as I mentioned earlier, our upcoming free events, say every Friday at 4:30 p.m. Eastern Time, we host that open forum, open discussion. Typically every Wednesday at 12 noon, we host the Introduction to Power Options presentation, and Kurt Frankenberg hosts his Introduction to the Radioactive Trading Techniques every Tuesday and Thursday at 12 noon Eastern Time. All right. Well, again, if you have any questions later on after we close our presentations, please feel free to email me to support@powerop.com. Of course, you can call us toll-free during market hours at 877-992-7971 if you live inside the continental U.S. If you live outside the continental U.S., you can reach the 302-992-7971. There's contact links on every page. Wow. Well, I apologize if I spoke too fast in some of those sections, but we had a lot to cover today. I had a lot I wanted to show. It's always really important to spend time in that portfolio tool just to show you how robust, as Scott had mentioned, and how powerful it is to help you with your trades. I hope you got a lot of useful information about this, and I hope to see you again, all of you again soon, either on another webinar or during one of our free coaching sessions. Take care, everyone. Happy trading. We'll see you soon.